Okay, everybody, I'm going to take you through the problem we've been working on. I've gone up to the 30th of June in terms of recording the depreciation entries and schedules. I suggest if you tackle these questions, do it by the date order rather than trying to tackle one item at a time, because you might find yourself in a bit of a hole and it might get too confusing in the end. Okay, I've got up to 30th of June. Okay, we're going to trade in one of the computers here that were purchased on the 31st of December 2009. So it's now 31st of December 2011. And we're going to trade in the computer because it was breaking down. We're going to trade in for $3,800. Okay, the new one's going to cost us $10,800. That's pretty dear for a computer, but we'll get through in this. It says plus GST. Don't worry about that too much because it's means we've got to add the GST on. Okay, so on the computer one, first step in the process is to depreciate up to the point that we have it. So what I have here, I've just completed this section only, which is I've depreciated on the 31st of July 2011 for 1 month, and I've done this here for the extra month. So if you can look at the formula bar, you can see I've used the SLN formula, and I have used the cost, the residual value in the life, then I've multiplied that by 1 month out of the 12. Okay, so we're going to we're now going to record that depreciation in the ledger. So on the 31st of July 2011, I'm going to put the depreciation in. Notice how I'm just using the equals key a lot, copying and pasting words. I'm doing whatever I can to make this just that little bit quicker. It's only $156, but that $156 can mean we want to make this as accurate as we can. Okay, so even though depreciation isn't an exact sign, well, it's not exact. It's as close as we want to be, as close as we can be. Okay, so accumulate depreciation. So I'm just recording this in the depreciation account as well on the 31st of July. So I'm only recording it up to the point that we own the item. So there's nothing in this account to start with. Okay, so now I've depreciated it up to the correct point. I am now going to the first step, next stage, second step, is to remove the computer or move the asset from our records. So if we go to 31st, record the date, we're going to transfer the amount that's in this account. So we need to hit a big reset button, make this account 0. We're going to remove this and put it into an account called the disposal of computer 1. Okay, and the disposal account is really just like a big mixing box, working account. It's just there to calculate how much we're gaining or losing. So this computer is now off our records, it's 0. And we're going to go down here and we're going to put in the 31st of the 7th. We're going to get used to that date because we're going to type it in a few more times. Computer 1, and we're going to put down here $8,500 in the debit column. I hope that's the debit column. And over here, and we're going to put debit. Okay. Next stage is to transfer the accumulated depreciation. So we're transferring everything that is pertaining to the asset, everything that is associated with this asset needs to be removed from our records. So the accumulated depreciation needs to be moved over to this account here. So over here, I'm going to put in, so it's 4,844. It's a credit side, so I need to do a debit entry to make that 0 that account. So I put a 0 there and credit the account. And now, so I'm going to waddle down here, and we're going to record accumulated depreciation at computer 1. We'll put in 4,688. Okay, so the new balance of this account is 8,500 minus 4,644, and 3,013 is the new amount there. There's more money on the debit side. So now, got a couple more things to do. So now we've got these two items here. Now what we need to record in is the price that we received for the computer, which was, I have to go back up to my question, and if you can see 3,800, you can see my mouse circling there, 3,800 we received from that company, and they're going to be an accounts receivable. I'll put there. Sounds about it, right? Actually, I might just say bank, because I won't need to, if I say cash, it's a bit simpler. Okay, so $3,800. So I can already see I might be making a bit of a, it's worth to us $13 more. So 3,813 minus 3,800 is 13. So it's not a big loss, but it's a little bit anyway. So now, this is a working account. I can't put this account anywhere. It doesn't work in, it doesn't have a, it's not an expense or revenue or anything like that. So I know now it's going to be a loss. So if it's a loss, it's going to go to an account called loss on disposal. Okay, this loss on disposal account will then house this money. So needs to get rid of this disposal computer run and loss on disposal. Okay, it can be called loss on disposal of computer 1 as well if you want to be a bit more exact, but that is just fine. So I'm going to put this $13 over here, and it's going to be $13 loss. Okay, it's a nice neat little amount. And also I need to close off this account because I don't have this open anymore. So let's go on the credit side. Okay, right. Okay, so both sides will equal, and I'll just copy that. Okay, and so we've got $13 loss on disposal, 31st of July. So next step in this process, the next stage in the process is to record the after we've done the disposal account is on the 31st of July we need to record the purchase of the new item, which is computer 4 at 10,400, and these are the details of it. So I've created a new area down below here in a schedule there. I'm not going to do up the full schedule for 3 years because we only need to do up to the 30th of June 2012. Okay, so first, now I've recorded the item into our records. It's now got its own ledger account. It's going to have its own ledger, accumulated depreciation in the ledger as well. So we're going to record up to the 30th of June now. So we've got this now, it's now became active on our records on the 31st of July. So we're going to need to now fast forward up to the 30th of June 2012. And we're going to finish this question off. So I go through and I put in a new amount, and I press equals. It always helps. As I said in the last video, these questions should be using depreciation a bit more accurately. Diminishing balance would be more appropriate for technology and vehicles, as they will depreciate very quickly. This isn't going to be for the full 12 months. We've only had this item on our records for 11 months. So we haven't had it for that full time, so a full 12 months. So we need to multiply it by 11 over 12. And that will scale it down to 12 months. Total depreciation for that period is just 1. When you have 1, it's 2017. The new balance of this item is 8,700, and that's okay. So we need to do this for the rest of the items. Should be 2, should be 3, and we need to just make sure they're as accurate as we can. So these computers 2 and 3 were for the full 12 months. I need to do the SLN formula, which I hopefully can do. I didn't use the absolute referencing, which is the dollar signs, which has made my job a little bit slower, but nevertheless I can be pretty efficient at it. And just got to keep okay, and the final one here, computer 2, which is still on our records on the 30th of June 2012, and the fourth period of that one, and do the same function again, which is SLN. Make sure I select the right one. Click and click here. Clickity. Alright. Plus 1,875. We now have a residual value of, what is it? This amount here. This is 1938. Okay. And that was for the fourth year of that asset. In reality, I should be probably, since that's the final actual year of its life, shift our cells down. It's a bit fiddly here. Hopefully, there we go. Since it's the final year of its life, I need to adjust it so it meets the residual value, since we've had it for 4 periods there. So I need it to be $1,000 at the end of that useful life, which will then I'll just need to make a bit of an adjustment. So I've got an additional bit of a depreciation of about $938 actually, and the total accumulated depreciation will be that way. Okay, so 7,500 is the total in that one there. Whether we still keep the item on our records is up to that business. Okay, after that date, we're not disposing of it at all. And it doesn't say so in the question. So go over to the ledger, and we need to record this, and I'll do this as quickly as possible. If you think that I'm going a bit too fast, you can always just rewind it, which is much better than being in, you can't do that in the classroom. Okay, so question 2. We go down here to, and we get the depreciation amount. What I'm going to do, I'm going to add them both together, and that was the total depreciation for that year. So if you might have to watch it what I did. I'll replay that. The new balance is 7,500. Debit, it's credit. Right, and I've got the 1, 2, 2, 3. So I have to think about that then. And depreciation, I'll just use the equals key there. Alright, so the accumulated depreciation of this computer 3, or the depreciation we're going to do it for that month, is 2,100. We're increasing this amount, and we're going to go down now to depreciation for computer 4, which is 30 June 2012. I'm going to put okay, and right, and it's for 2017. Okay, and more money on the credit side. We also need to have this account here, depreciation. We've already done one for on back in that date, was still within the financial year. We need to record the final one. And this gets a bit tricky here. Okay. Depreciation is abbreviating. Computers 2, 3, and 4. And I'm going to add all the figures together. So you need to be careful here, get the right amount. So take your time. Take your time in doing this, and make sure you get the right one. Attention to details, everything. If I get it wrong, feel free to correct me. So 156 plus 6,229 We've got a total of 7,085 in depreciation throughout that financial year. Okay, this is the last remnants of this computer, and it'll be on our financial records. So I've walked down, I've pre-set up the 2012 statement of financial position. In this one here, we're going to have a loss on disposal from that computer one, and in this and we're going to have, keep clicking back, it's frustrating, $13. In also in there, we're going to have this depreciation. Okay, and this depreciation account, and that's 7,500 from 1885, sorry, for the year. So there'll be some expenses there. Over here, we're going to have the following amounts in the statement of financial position. Just to check out it goes, you can just use the schedule. It's still got exactly the same information. If you've done it correctly, it will have the same information. So accumulated depreciation on computer 2 will be 7,500. Just use those figures. Again, just slow the video down or take a look at what I'm up to, and you'll be able to see where I'm getting these figures from. I'm using these only simply because I'm scrolling. It's harder to look at a ledger sometimes. And that's it. Okay, so it gives me, so the idea of the statement of financial position is to give me a current value of the asset we currently have on our records. So we can just see how much the asset is currently worth. Okay, so that is the full question complete. My suggestion is whenever you encounter these sorts of questions is to draw up a timeline. I'll add the timeline to the OneNote page where I took a photo of the whiteboard. That way you can see and do it in date order, chronology, do it in that order, okay, because it'll make you a bit easier. Remember, only go up to the date that we say in these records here. That way it can be there's no point in going further, okay, because that's all the question's asking for. Okay, and make sure you save your work. All right.